Alrighty guys, welcome. Let me know, how is the audio, just testing it out. Something a little bit different today, of course, being a no news Monday. Not really what I want to see with price action in the Asian session, so I thought I'd come on here and we can do almost like it can be a mix of live market reading, but more like a question and answer is what I'm after. Now in terms of the audio, just let me know in the comments or in the chat, how's the audio sounding? Can you guys hear? Let me know. Beautiful. So yeah, we can take this as an opportunity. So if you've been following me pretty good, yeah, it's all good. Take this as an opportunity, I suppose, if you've got questions to ask me now. For anyone that's from my Discord, just let me know. Normally, I'd be going live with the premium Discord, and I was going to go live Monday to Friday this week. Although, looking at price throughout the day and looking at what price pretty much has done all of Asian session, it's not really what I wanted to see, right? So we'll see what the market wants to do, but in these situations, I prefer just to not trade because I know there's going to be cleaner price action. I mean, we started the day quite aggressively and quite interestingly, and then we kind of went into this chop. Whenever we're in chop, I just don't like to trade it. So it seems as if maybe the volume and volatility has, almost gone back to normal, could be the way to put it. We've had some really big weeks, really big swings in price action, I think, which have been nice, right? But obviously you've had to manage your risk as appropriate. Beautiful, yeah. I just saw that message too, Glenn. That's beautiful. So obviously this last macro, and I know someone posted this in the Discord too, right? We can mark that out here. 150 to 210, right? For me, this is too choppy. I need price to expand more, but even if price does expand, I would probably rather personally trade later on. What I mean by later on is either in the silver bullet or even in these time frames here. Just to let price expand a little bit, let price do its thing. And that's what I'd be looking for. I think someone in my Discord posted a short, right, from this inversion fair value gap here. Now what I usually do, I include the volume imbalances too. So just for the purpose of this video, you can see from like here to there, if you extend that across, there's like an inversion fair value gap there. I think they had this as the sweep of liquidity and then this as the inversion. Which is all good, it's all good, right? Now I want to see if I can draw some boxes. Yeah, beautiful. So what they had is something like this. Usually I make my inversions like an orange color. That's usually what I do, right? Now for me, I didn't trade that, I didn't take that trade. It's not something I normally would. Why not, you might ask? Just because of how price action is printing. So in these situations, I want more candles like this, but I want more of a range to develop. That's what I like to trade. So that's generally what I like to do. ES, NASDAQ, mainly it will be the NASDAQ as well. All right, so this is something a little bit different. And if you have questions, let me know. I like the gaps in a sense because it shows me how much volume we have in the market. No gap indicator is cool, but yeah. Just because I know if I see price action like this, it reminds me, a couple of weeks ago, Asian session used to look very similar to this. And then we have those massive swings in price, which are obviously quite interesting. And then price was doing its thing for quite a while. So, in between macros, you might ask, what do I do? Am I still looking for a trade? Potentially. But today, yeah, I'm going to be sitting on my hands just looking through the markets, at least until silver bullet. So I thought I'd come on here for a little bit anyway and have a chat to you guys if you have any questions. If you're not in the Discord, the free is still there, right? We've got a community, we're building a big community there as well. We've got heaps of people from across the globe, all experience levels too, right? So not just, people that have been trading for years. It might be someone that's only been trading for, 2 months, 3 months, less potentially. So if you have any questions, ask them. We'll make this more like a question and answer while the market's printing, and you can ask me as we're going through. Someone asked, do the concepts you teach on NQ futures apply CFD market? Yeah, they do. Yeah. So I used to trade NAS 100. That was the main instrument I used to trade, or US 100. Same thing, NDX 100. All the same kind of instrument. They all still apply. So when I started, it was NAS 100 Oanda. That's what I used to use. And essentially, I went back from my screenshots. When I started to use macros more heavily, I went back in my screenshots from last year in May, late April, and it still works. It still works. Obviously, the chart was annotated a little bit differently, but yeah, I'd look at where these things happen. Have a look at ICT's videos too, is what I'd encourage you if you're still in the learning phase. And have a look to see, you know, when these things do occur. A lot of them happen in a macro, right? Which is quite interesting with price action. So sometimes I watch ES, I watch the NASDAQ to see if there's any differences or divergences during key time frames. That's what I like to see. Andrew, yes, I've got now a free section in the Discord. So I've opened up a free section, not the whole Discord, but yeah, a portion of it is free. So all the PDFs from all the YouTube videos I've posted, the last 8 or so videos, they're going to be inside there too. 2 more videos in that series. I've got a few things planned. I don't know. You guys in the Discord and obviously YouTube and Telegram, most people are saying they'd want me to do some kind of review of the 2024 mentorship, which could be a play. Could be a play for sure. I think he's going to at least release a few weeks worth of content. So it might be a matter of maybe bunching together episodes 1 to 5, episodes 5 to 10, something like that, and then into a few videos. But again, as Mark in my Discord said, it's good to have a look at that stuff yourself and take your own notes, and then I can look at the summary for you and have a bit of a look at it. And if you found something already, then stick to that, right? So even though I'll be watching the videos, for me personally, I don't really need to apply anything more. But it is interesting to look at, right? And as well, for anyone watching, I know some people still trade, you know, Forex, not futures. If you still trade Forex, then what I'll be doing is still looking at macros. Macros still work. Do you trade Silver Bullet? So I do trade Silver Bullet. Whether it's the London session, probably getting into, you know, the New York session again, AM session soon. But I'm more just trade macros. So I'll be looking for things to happen. So yeah, I'm more just trade macros, so I'll be looking for things to happen, you know, around those time frames. The easiest way, and I've said this before on YouTube Live, the easiest way to explain my strategy is 10 minutes before, 10 minutes after every single hour there's a macro. Every hour. The Asian session, as you guys have seen that are in my Telegram, right? The Asian session I've taken trades, New York session, in between sessions where people wouldn't usually trade. It's all a matter of looking for certain things around those, you know, time frames. But everyone's going to be different in terms of what they're looking for. So if you're a Silver Bullet trader, there's nothing wrong with trading just solely Silver Bullet. But will Silver Bullet always be great? No. I mean, if we go back, say, to, I think it was last Friday, and compare Silver Bullets, right? Three o'clock is somewhere here. We come down, we create equal lows. We come up, we come down, we come up, we come down, we come up, we come down, There's not much going on there. So sometimes Silver Bullet's not the best, and it'll be either before or it'll be after where it'll perform. So I don't really limit myself to, okay, Silver Bullet is the only time you can trade. But if it's the only time you can trade in terms of like your time frames or where you're from, then do it. But in saying that as well, if you can't trade Silver Bullet and maybe you can only trade after Silver Bullet, don't feel like it's the end of the world, because there are opportunities there too. The London Open session is from 2 o'clock to 5 o'clock, right? So you can pretty much trade any time in that session. The whole session, like obviously now it's about 2:30. You can trade the whole session, you can trade 1 hour of the session, you can trade just macros of the session. There's so many different ways to apply it. And it's all a matter of, what works best for you in terms of your schedule. That's the way I'd put it. So in long, that's the long answer. In short, right? In short, I'd say, yes, I trade silver bullet, but I focus on macros. So it could end up being in silver bullet, but in a macro too, I guess. Is an inversion fair value gap valid if it's tested more than once? Yeah, I'd say so. I mean, say, what happened today? I mean, even here, this is a good example of an inversion. This is at the start of the day, right? So if you have a look, big bullish gap, and I'm just gonna make this magnet turn on. Big bullish gap here, guys, right? We invert that with this candle. Technically, we trade into it here, right? Here. We can trade into it multiple times. It's like, so here's the thing, it's like a fair value gap. If price respects the halfway point, it's more bearish. If it doesn't, then you'd want to see an order block form there, like this, and then a close below to indicate that it's actually going to be used as an inversion. So just like a bullish fair value gap or a bearish fair value gap, I don't usually just enter off the return most of the time, unless I'm really confident in the draw liquidity. I like to see a little bit more, and then a lot of the time I'll just mark and execute. If it's in a macro, even better. So hopefully that answers your question there. But these are the questions. Any questions, just send them through, and we can go through them as we talk through the markets. What is your favorite ICT model that you use the most? Macros, for sure. If I wasn't using macros, I'd probably go with silver bullet, if I'm honest with you. I mean, keep this in mind, guys. Keep this in mind. A PD array is a pattern or an entry technique. What matters more is the drawn liquidity and the narrative. Keep that in mind. So what I mean by that is I can enter an inversion, I can enter a balanced price range, an order block, a reaper, a bullish gap, a bearish gap, a breaker, a mitigation block. It doesn't matter too much what you enter from, but why should price get to where you want it to go to? What are the things leading you to believe that? And is it more probable to get to your location? And if it is, that's a valid trade. If it's not, then that's when you sit in your hands, aka in these conditions for me. So that's my favorite model, macros, which he talks about, but not a lot, right? They occur every hour, and this is something I've been forward testing and back testing because of the fact that, work schedules change. And I know some people, even people I've talked to, like if you hear from the Discord, sometimes people work. Even guys I know, they work until, if you're from Australia, right? In the afternoon, at the moment it's 4:30 in the afternoon here. They work till 5:30. They don't get to home until 7, and they think that it just opens up the doors for trading. Even if you're from Asia, Europe, South Africa, wherever, right? You can still trade, and that's what I love about macros. It's really nice. I found the London app at 9 is not very profitable to take trades. Yeah, I mean, sometimes, sometimes the price action will be weird in certain time frames. And it's one of those things where, for example, today's a no news Monday, it could develop and end up being really nice, right? But the thing I'd say is that you got to take every day as a new day. You know what I mean? Look for things to repeat, which is really important. And then those things that repeat, those are the things to note down. So if you've noticed that, during certain time frames, price isn't good for your model, don't trade it. I think any ICT model, any ICT model can work. The typical market structure shift return to a fair value gap, that can work, but only applied in the right context. Without the right context, no model works. Even macros, without the right context, it's not going to work for you. It's not going to work for you. Trade equals minute one time frame. I know what you're talking about. I know what you're talking about there. I am on the 1 minute time frame. Yes, that's correct. I mean, we can go to the 15 minute if you want to have a bit of a look there. I just look in the 15 minute for imbalances. That's all I do. We are sitting obviously in a 15 minute one here. You can see that we have swept this low in the 15 minute. Just saying. We have swept liquidity and tapped into an imbalance on the 15 minute. That's right, yeah. Sorry, mate. Just saw what you posted. All right, cool. So just skip the question. What do you look for in a macro? So what do I look for in a macro? Wow, there's a lot of things. Sweeps of liquidity, inversions, fair value gaps, previously generated low resistance liquidity. Those are all things that I look for in a macro, or around a macro time frame. So you look for liquidity around the macro time frame you can target, but in the macro you don't have to have everything in the macro. It's kind of like silver bullet. You can have the setup form before, and then you can enter in silver bullet. Same thing with the macro. The setup can form before the macro, and you can enter during the macro. But if it sets up and it forms in the macro and it starts transitioning in the macro, even better. You know what I mean? So every day is going to be different. Every day is going to be different. But that's what I look for. And the reason why, honestly, for macros is because it just allows me to focus on certain points in time. And I have a bit of leeway too, right? I have a bit of leeway too. So it's not always going to be, just in the macro. And if it's, at this price point, if there was something I was looking at, I'm not going to not enter, right? Because I know if I can enter before the macro can spool and it can run towards liquidity, for example, or feel some kind of imbalance. But it all depends on what price has done in the past, right? What's previously happened in price. And just going to mark some things out. But yeah, ask these questions. This is good, right? And I think, yeah, like I said, I think anything works. It's not a matter of, saying silver bullet's better than this or macros are better than that. It's not really about that. It's more finding what works for you. If you prefer silver bullet, if you prefer the typical, market structure shift, go for that. Go for gold, you know what I mean? But if you're struggling, to apply that, then try out different things, you know what I mean? But give yourself time. Give yourself time for things to work or not work, if that makes sense. And I see all your comments, guys. I really appreciate those that, the recent videos that I've watched or that I've posted, sorry. I see who's watching the whole thing or close to the end. I do see that. I do see that because you're commenting what needs to be commented. And I do appreciate that. So if you have any questions, let me know in the chat. And I'll be constantly monitoring the chat, a bit here, a bit there, seeing what price action's doing. And we're just gonna watch price action, right, in the macro, leading into silver bullet. Right, so something a little bit different today. So again, yeah, if you're not in the Discord, I've got a free section. I'm not saying I'll put out online to be profitable. It's more if you're looking for those calls similar to this or something more, I guess, private. Similar to what we're doing here for a group. And right now, it's not that big. You'd be surprised, right? We don't have too many people in Platinum. It's a nice tight-knit community there, which is really good. The Discord, we've got about 200 members there. So I see who's active too. So if you're on the Discord, I see who's active. I see those that that are commenting all the time. Same with the premium, right? I see who's there. I see who is helping each other and posting things, and it's a good thing. It's a good thing to see. It's a really good thing to see. So again, yeah, any questions, post them in. More than happy to answer for you. One thing I will say about trading and time frames, how long I look at the markets for, just depends, guys. Just depends. Usually once I'm done in terms of my own personal trading. Once I've taken a trade, I'm done, and then I watch the markets for a little bit. Chart time is always important. So doing that is a really good thing, I think. Andrew, do you enter a trade at the start of the macro or wait a bit to see the direction of price? Yeah, it just depends, to be honest. You know what I mean? So we're approaching the macro now. I'm not trading today. I'm going to be trading later on if price develops. But say like it was a normal day and I'm happy to trade. If there's a setup now, I'd take it. I would personally take it. Why? Because the macro is very shortly coming up, and if the macro is going to run to targets, then it's going to run to targets. It all depends on when that setup forms, if that makes sense. So if the setup forms before the macro, yes. There's reasons why I'll take trades, 20, 30 minutes before a macro. But that's based on, something that I'm working on at the moment, and I'll talk more about that in the future. But if you're talking strictly macros, even if you go back and you back test, right? New York session, London session, Asian session even, more often than not, things will start in those time frames or they'll continue in those time frames, if that makes sense. At the moment, not every Monday, nah. So usually I do this for the premium, and we go on live and we watch the markets and we have a chat. I'm thinking on Fridays to do something. It could be something like this, or it could be something a little bit different, just doing some kind of stream for YouTube. And that'll be on Fridays. End the week, could be a review, could be something, right? Could have special guests on, like a little podcast style, something similar to that. But this will change as well, you know what I mean? So in terms of how many trades would I take a day, well, depends what I'm doing. So I can be completely transparent. It depends what I'm trading or what I'm doing. So say with Top Step at the moment, I'm with Top Step at the moment. If I just got an XFA, for example, I'm happy to take a few more trades to start off to build, a little bit of a buffer. But once that buffer's built, then no, it's just going to be okay. Once I've taken the base hit, I'm done. With Apex, it was just one base hit, and then I was done, right? Regardless of what price did. And if I wanted to trade again, then I'd work on another account. So I've never copy traded, ever. Never tried it, and prefer just to spread the risk around multiple accounts. So if I do want to trade, I'll just go to a separate account. If I don't like the conditions, I'll just leave it and come back the next day. But I think when you start, definitely limit yourself. When you take a good trade, call it a day. There's no point in continuing to trade, in my opinion. 0 point. Like if you've taken a good trade already today, like say the person that you should be done. Unless you're trading on a separate account, right? If you've got a couple of accounts you're trying to, evals you're trying to pass, whatever it is, just call it there. You know what I mean? Because there's fear and there's greed. There's two things that stop you from getting past. There's two things. Or for me anyway, right? Starting into the trading scene. For me, it started with fear, and then it probably turned into greed, and then I had to manage both. And it wasn't until I managed both that I fully was able to, to get consistent payouts, which so far has been every month, which has been nice. Before that, you might pass an account and you'd blow it, for example. Or you wouldn't even be able to pass phase one when they used to have, my Forex funds last year, which was my first prop firm I was with. Not even phase one, right? So there's all these little things that you got to consider. But everyone has their own struggles, right? Everyone has their own struggles. So they're good questions. They're good questions, guys. And again, I'm just marking different PD rays out here. So we can see the macro obviously is approaching here too, which is nice. That was your little sell side. So if I was to mark that out, that's your sell side liquidity right there. And then this is your 15-minute imbalance that I mentioned down there. It's a small one. It's a very small one, but it still exists. So it's always just important for me to mark out. Right, marking out different PD rays. There's technically an inversion here too. I usually, what I like to do is I mark out the base PD rays that are there. And, say you wanted to mark out like an inversion, for example, you can mark that out, right? And then I'll just label it like this. And put like inversion, fair value gap or something there too. So that's generally what I do. So yeah, that's a good question what you just asked before, and I think risk management is an important thing, and that's why you guys might have noticed it too in YouTube, and if you're from Discord, obviously I've talked about this in the platinum calls, but realistically, the high volume, high volatility markets the last couple of weeks, depending what sessions you trade, they can right. So for me personally, when I was trading Apex, a 10 handle trade, a 15 handle trade was actually a decent scalp for the London session. The last couple of weeks, obviously, that's turned into something different. We've had, 1200 handle ranges, 600 handle ranges in Asian session out of all sessions. So when you change risk management, it changes a lot in my opinion. And that's why the most two important things apart from psychology are your risk management and preserving your profits. So in terms of limiting yourself, once you've taken a good trade, in my opinion, if you've only got one account, leave it. If you've got multiple and you're seeing something later on, then it's worth it, in my opinion, if you're matching all your rules. But realistically, yeah, it's just one of those things that everyone has their own personal take on it. At this stage, not New York session. So being from Australia, it's a bit late. So I think the silver bullet, for those that asked about silver bullet, it runs from 12 o'clock in the morning Australian time up until 1 o'clock. So it's a little bit late in terms of time frames as well. So again, this is the macro, and always be mindful. 3 o'clock volatility. Volatility comes right at 3 o'clock. Some people, they want to wait until that volatility is out of the market. This macro and this macro here, either they're going to enter before, heaps early, or they're going to wait for the 3 o'clock volatility and see what that wants to do. We can have a bit of a look at ES now too. Yeah, it's not typical price action that I usually would trade. I'm marking out PDRAs here just for the sake of it, and I would be curious to see how 3 o'clock does open. But there's definitely trade ideas you could phrase, just saying. And again, 3 o'clock's coming up shortly, so we can see what that does. But hopefully that makes sense in terms you can look at all this price action here. It's not cleanly developed. If you say go to a separate day in London session, even Friday was very messy here. But at least there's still imbalances. So for me, what I like to see, I like to see imbalances. I don't always like to see this wicking kind of price action. I like to see imbalances, and I like to see movement. So far we're stuck in this range. So if you were going to mark out an Asian session range, you'd go probably this high, and then you'd probably go this low here. We're right smack bang in the middle of that range. Right in the middle. Which makes it tricky in my opinion because you're at equilibrium. But good questions. Good questions there. And again, I don't know, everyone in the chat here, where are you guys from as well? Who's from the Discord, and then who's from YouTube? Let me know. Let me know in the comments below, just so I know. I'm assuming there's a few from the Discord, maybe Tony, David, a couple others. Let me know if you're in here from the Discord. So Molly, it's better in my opinion. It's better. Not during the macro. I wouldn't say during the macro, but having a liquidity sweep before or during the macro is better because once you sweep liquidity, you can always reprice, which I think is a great thing. Without the sweep, you'd be looking for SMT. You would need SMT in my opinion. You know what I mean? So that's the way I see it. And I know in this chat, we've got people from across the globe too, right? Heaps of people from across the globe. From Discord, YouTube. From YouTube, rather. Discord. But I'm thinking of doing things similar to this, right? In the future, right? So it might not be live trading, but it might be at least a question and answer. You get me? Ollie, nice, bro, nice. YouTube. Jimmy Patel is probably going to try and fade me. But yeah, I'm not personally trading at the moment, so if you're watching Jimmy, I'll probably see a message later on. That's right, I do appreciate it. I've got a few things in the works which let me know what you guys think of it, right? What I've been wanting to do for a long time is potentially do like interviews with people that either have past challenges, gotten payouts, or in different stages of trading, because I think it can be quite insightful to hear from other people from across the globe, and that could be you too, you get me? So my email is in the description, I'm pretty sure, on YouTube. If you think that could suit you, let me know. It's been something I've talked about months and months ago, but that's the one thing I do think is important. Another thing is I'm planning on teaching someone I know, right? And documenting the process. Teaching them what I know, you know, what I'll talk about in the Discord and in the premium, and documenting the process, because I truly believe, so if I could go back, I truly believe if I had macros, it would have changed the game, because it would have allowed me to focus on something at a narrow time frame, you get me? The Robbins Cup, yeah, you never know, Patel. Hi, if it's not too much trouble, could you please scroll back? So I'm just going to get this up here anyway. I'll just read that again. Hi, if it's not too much trouble, could you please scroll back to any trade that you thought was ideal? So for me, there was no real ideal trade because of all this choppy price action. I know someone else mentioned in the Discord this macro here, if you have a look, and I'll mark it out with two lines here for you. This macro here, right? I know someone marked out, you know, you had your inversion fair value gap potentially, if we draw that out, right? We had an inversion fair value gap, we had our liquidity sweep here, which is what someone mentioned, and then we reacted to the downside during the macro, right? It illustrates the purpose of macros too, but not something I personally took. So yeah, there'll be a couple series hopefully, you know. Interviewing people I think is important, giving back to the free community I think is important. For the premium members, if you're in this call, I will be posting a couple of ideas for you guys too, and then you let me know what you like. You know what I mean? If that makes sense. Any updates? Are you moving to a live funded account soon? Should be soon. Is taking 5 losses around normal? Depends what you consider normal. I mean, how big are the losses? Are you just getting out and losing, you know, $10 a trade? Or are you losing a full risk amount? That would be my answer for you. 5 is pretty extensive. It would probably mean you're not confident with the idea, or you're exiting too early, but it depends. If you were to ask me, you know, is taking 2 or 3 losses in a row normal? I'd say yes. 4 or 5, I'd say yes. Mr. Up, never give up. I know I'm a big gambler. I'm a big gambler. A profitable one too. Molly, if Asian highs swept, it would have been better before price went lower. Yeah. So the next video, Molly, that I'm going to release is about those typical setups, you know what I mean? Those things that occur time and time again. And one of those is a sweep of Asian liquidity. In saying that though, and we're about to start silver bullet here, in saying that, right, you always got to be careful when you're looking at these generic setups, because if you say to yourself, oh, it's always going to happen, that's when you get into trouble. If you demand the market go, oh yeah, once we sweep Asian buy side, we have to reverse, that's when you get into trouble. But if you sweep Asian buy side and you have a nice reaction and you're in a key time frame, that's when the highest probability trades, in my opinion, will form. And those are the bread and butter setups that should be very high probability, if that makes sense. That's what I'd say. And you can see how this candle, right, the 3 o'clock candle, I know a lot of people don't trade around 3 o'clock like, because they know that that time frame can induce a lot in price action, right? But these are good questions. And again, I appreciate all the support. Now, I do see everyone's comments, like when you guys comment about certain things, I do see them. It's just a matter of logistically like organizing and figuring out, you know, when these things are going to happen and how it's going to be portrayed, I suppose. That's the best way to put it. But I do see every comment, so I do appreciate that too, right? See, any questions, right? Any questions can be great. And I'll be curious to know, right? I'll be curious to know out of you guys here, because we've got 43 listeners. This is probably the biggest stream so far. For you guys, what session or sessions do you trade? If you're not from my Discord, or even if you are from the free Discord, right? I haven't chatted to you directly. What sessions do you trade? Do you trade like Asian, London, New York, or a mix of all? Because again, the content that I produce will be based on, you know, what the community needs or wants. Let me know in the chat. New York and London, Asia, London. I feel like New York is the most popular session, or London session. Depends where you're from too, right? Depends where you're from. Like New York session, mostly you'll have, you know, the volatility or the volume. Lately it's kind of been like all sessions have the volume, which is good and bad. London, New York. London, New York and London. And this stream will be up after. So if you guys want to have a look at anything or go back in terms of the questions, then go for it, guys, you know what I mean? It's random. It's random, I know. It's very random. Appreciate it, Storm, appreciate it. Now you guys might say to me, oh, well, yeah, look at this macro, we're going up this far, but it'd be wrong of me to say that it happens every macro, because it doesn't. But it illustrates the point of macros, you get me? So, you know, you phrase trades within macros. If you wanted a short here, you could take it. If you want a long here, you could take it. But for me personally, I'm not trading at the moment. But in my opinion, these are the highest probability times where something is going to happen, right? This candle in itself, if we mark out how many handles that is, 621, that's a 20 handle candle, which is quite a large, you know, quite a large range there too. So I'm just going to mark things on the chart, because this trains your eye, right, to see certain things in the market. So we can talk about that, right? We can talk about that. You see what 3 o'clock did. right? You see how the volume, you know, started to print out from roughly the 3 o'clock candle. Before that, we'll muck you around a bit. From 3 o'clock, we actually start to move. We move quite, you know, quite abruptly, which is interesting. And I think a lot of people are hung up on, you know, you might want certain risk to rewards or whatever it might be. Risk to reward is fine. Target liquidity, guys. Like when you're looking at this chart, anything here, I'm just going to get rid of this for a second. In this price swing, and this will be like a lesson as we go through, right? In this price swing, this for me is the dealing range. This is the dealing range. So ICT talks about dealing ranges. It's one thing he talks about, I'm pretty sure, in the new mentorship as well. That is the dealing range. Why is it the dealing range? Because we've swept liquidity here and we've also swept liquidity here. It's the downwards move leading into when we're approaching the macro, just so you guys know. And what he does, right, he pretty much, if I just get rid of this and get rid of that to make it nice and simple, that's your dealing range. And if I get rid of this, I'll add stuff back on a bit later on. With that dealing range, for anyone that's new, you separate that right into quadrants or into half points, etc., etc. So you can grab a fib, for example, grab that range, you know, from this high to this low, and you can mark out where the halfway point is. Essentially, anything above that obviously is going to be a premium. Anything below is going to be a discount. So if I was maybe just to change the color here of this top portion, and I was going to change this top portion, and I was going to make this green, for example, like that. And then the bottom I could just leave as yellow, right? That there is going to be obviously your level of premium. And you'd be looking for anything above that premium for TP levels, right? Any imbalance, any liquidity point, which we can talk about, there's multiple there. Mr. Up. That's great, isn't it? You're a real supporter. You're a real supporter. You get people like that, you get people like that. Send me a message, Mr. Up. Send me a message. Send me a message. Send me an email. Even better. The quote, I love the quote too. I love the quote. You pop it in every couple of minutes. I love it. So in terms of this, we came down, obviously, you know, swept that sell side. No, it's all good. I don't mind it. Keeps things interesting. It keeps things interesting. I think I know who he's quoting as well, which is funny. But no, it's interesting. Anyway, this is the dealing range, right? So this is your premium, that's your discount. Now, you might say to me like, oh, when do you know when the range is formed? Well, again, we're approaching the macro here. You're looking at the previous swing in price, because if you're looking for longs, and we'll do the same if you're looking for shorts, we'll do both, because I know someone in the Discord went for a short here. You're looking now for a framework to occur, right? Now, I just want to illustrate here that there's every single entry model here. There's every single entry model here that you could use to take the price higher, right? And we're going to discuss a couple of them. Number one, we'll probably make this, we'll call it this, guys. We'll call it this. Number one, we'll call it an inversion fair value gap. Number two, we're going to say a bullish fair value gap. Number three, we're going to say a turtle soup. So we'll have three. We'll have inversion fair value gap. We'll have a fair value gap, just a normal one, and we'll have the turtle soup. A lot of people are strung up. Mr. Up, you're laughing it. I can tell you're probably laughing there. I can tell. That's all right. I'll laugh with you. So there's three and probably more, right, ways to enter this idea. Breaker is another one. Let's add all these in, right? Just to illustrate the fact, and this is what I was talking about before, the PD array is the entry model. The more PD array supporting obviously can act as a strength form or a narrative. And this is kind of what we're looking at. So if we get rid of that previous range and we get rid of this here too, thinking, oh my God, you're not thinking, are ya, Mr. Up? Nah, it's all good. It's all good, mate. I don't know if you're from Australia or not, but it'd be funny. It'd be funny if you were. You could enter off this inversion, right? That's fair enough. And you know, the family member that I'm teaching, which I'm going to create a series on, we're using inversions with the macros. That's going to be the only PD array that we're using. That's it, inversions. If it doesn't form, it doesn't form, right? Now, some people go, well, I don't want to enter just when the inversion's created here. I want to wait till we retrace back down, and that's completely fine too. So when price retraces down, you could do that as well, right? So there's one PD array there. Now, these down close candles that purge that sell side, when we break above that here, that indicates a change in the state of delivery. For some people, they're happy to execute straight off that, right? They're happy to execute just off the CISD, which is completely fine. And while we're talking, I want you to see what price is doing in this previous bearish fair value gap. Just have a look, right? Now, we've got an inversion fair value gap. We've also got this that price can potentially use right here. So if you're a typical, 2022 model, and that's completely fine, you can enter just off the retracement back into a bullish fair value gap, and that's completely fine. So for example, you can have a sweep of sell side here. You can then go, okay, this is your market structure shift here or market structure shift there, whatever you want to see it as. Price retraces back down into this bullish gap, and that could be a long position. The inversion could be a long position, right? This breaker here could be a long position when you create the breaker. There's just so many ways, right? That price develops that you can take advantage of a trade. That's really, really important, right? You could even wait, for example, and go, okay, I want to do turtle soups. I'm all into turtle soups, for example, and wait for a sweep of liquidity here. If that's what you want to do, right? It all depends on what you prefer doing and what is the best entry model based on your style, your technique, or what you've practiced the most. That's what I'd say. That's the most important thing when you're trading. All right, so he's going in timeout. You're in timeout, Mr. Up. You're in timeout. Your name has worked well for today. We've gone up quite a bit. So yeah, this is just to illustrate the fact that there's so many different ways you can get into a trade. And what we're doing now in terms of tape reading is just as important as live trading. It doesn't matter what experience level you have, in my opinion. It's all going to be relevant. Because these things you see repeat. And then you see different scenarios start to set up that you can look for in any session. So, or to be honest, here's what I'd say in terms of different sessions, right? I'd say, in my opinion, to the season trader, for someone that's been trading, and for me it's only been a year and a half, right? But say someone's been trading for a few years. If I was trading for a few years, I'd probably prefer to trade New York session. Why? Because there's more volume, and if you know what you're doing, you can take advantage of bigger pools. For someone that's new, I'd say they can find London session quite tricky, because if they're coming from watching these people trade New York session and they're expecting these big moves, they're often expecting too much in price. Now, am I going to say here that price couldn't keep going up? No, right? But for me, that's if someone took a trade in along here, you should be out of your trade, in my opinion. You should be out. You should be out completely. Unless you got a runner, right? But you might say, why Ruben? Can't I just hold all my contracts to the highs? You could, but how long do you want to be in the trade for? And this is like a personal thing based on everyone's, based on your psychology and based on what you want to do. So it depends on your model, right? You can easily get wrecked in New York session if you're not applying what you need to know, because obviously there's so much movement. In London session, you can get wrecked in the sense of you're expecting these big pulls and you don't get it, so you might get a lot of break evens, or you might not get what you need to what you need to see. And now he's got another account. That's great. I love it. I love it. I love it. So the illustration here is for the macro purpose. I love it. You've changed names too. I reckon you got at least 5 YouTube channels and accounts, I reckon. And we can have a bit of a look at ES now too. Same kind of thing. ES has swept those highs and the Nasdaq hasn't, right? Now, a lot of people might say to me here, well, what do you do now in this situation? Like, what are your thoughts? What do? You just wait. Wait until the next macro. That's all. So there's not really like anything you can do. Obviously, if you're looking for a runner, then the runner's, stopped out. You're looking for things in this price swing, right, that are in a level of premium to take profit at. And this movement here, that's sufficient. 20 handle movement, 15 handle movement for London session is sufficient. With Apex, all I was doing was 10 handle moves. That's it. 2 contracts, 10 handles. Sometimes 11, sometimes 12. That's it. And those were obviously my first few payouts. Just those 10 handle moves, right? With top steps a little bit different now. I've been going for slightly larger pools, where they're warranted, of course. And yeah, there's definitely liquidity on both sides. Obviously here you got those relative equal lows there too, right? Which is quite interesting. But price will be price, right? So if I was going to leave something, I'd probably leave that there just to illustrate that fact, right? That's fine as an idea, right? The shorter thing's fine as an idea, depending on what you want to do, right? Do you want to enter off a bullish gap or an inversion? Whatever you want to do, that's completely fine. And now you'd be looking at any liquidity point, as you mentioned there, on this side of the curve. So anything down here, right, you could look at. And ask yourself, right, might we take out the liquidity? Now on the Nasdaq, we didn't sweep this high, but there is SMT at the highs. Which I mentioned before, if you don't sweep liquidity, you need SMT. That's one thing, to look at. The NMOG's been used quite a bit, hasn't it, David? When you're trading New York, were you mainly trading, I've traded both. So I traded New York to start. When I was learning off the first mentor I was in New York session. And at that time I was quite naive. I didn't even know you could trade London session. I didn't think it was enough volume to trade the Nasdaq, right? So I was like, I have to trade the New York session. So I started with the AM session and then the times changed back. So for us in a couple months here in Australia, the AM session, the silver bullet is 2 o'clock to 3 o'clock in the morning. So when that happened, I was like, what am I going to do here? And that's when I started looking at the London session. And I said, maybe this is going to have to do. And then I started trading the PM session as well. So all are tradable. Any session is tradable in my opinion. As long as it's moving how you want it to move, that's all. So a bit of everything, yeah. Started with the AM session for a couple months, and I used to trade Forex. Some people know that, some people might not. I used to trade Forex during the London session, and then NAS 100 obviously during the AM session. And then when times went back, I went just strictly NAS in the London session, and I found I had better success than with Forex. And I've only really traded Nasdaq. I've never really delved into the Dow or YM or anything like that. It's always just been the Nasdaq, I think. Couple trades maybe on the S&P back when I was trading NAS 100, but realistically that's all it's really been. So we'll see if we create like another order block here. That'll be interesting. Beautiful. And I'm looking, if you're in the Discord, I'm looking at what you're posting there in the general chat as well. Yeah. Cool. Now again, this is on the 1 minute chart. This is on the 1 minute chart. So I know some people will have access to smaller charts. And if you have access to smaller charts, guys, here's what I'd say. Make use of them in the very fine pricing, which is where you expect the reversal. That's what I'd say. Or if SMT forms, make use of them. You know what I mean? But if not, stick to the 1 minute. 1 minute does offer enough opportunity. And this is what I preach, right? This is what I preach. These quick trade ideas. And we'll see how much we want to push down now. See if those equal lows are sitting here, they're in play potentially. ES, we'll just monitor that too. So these lows in the NASDAQ are like all the way down here. It's a little bit different, right? A little bit different. $100%. People always ask me about my win rate, and it depends on the account I'm trading. But I'll tell you right here and now, on some accounts it could be 50%, on others it could be 80%. It all depends on the week. It all depends on how aggressive I'm trading, how many trades I'm taking. But as long as you've got a decent win rate and you've got a decent risk to reward, you're fine. So I don't think, you know, if you're going for a smaller win rate, a smaller risk to reward, a higher win rate is warranted, of course, right? If you're going for a bigger pool, then potentially the win rate is going to be a bit smaller. But a 1 to 2, 60% win rate, that'll do you wonders. Honestly, it'll do you wonders. And win rate is one thing, but then your day win rate is another thing as well. If that makes sense. So for example, like you could have a win rate of 60%, but then you win 4 out of 5 days. So when you look at your profit and loss, 4 out of 5 days are profitable, but out of those 4 days or 5 days, you're only winning 60% of the trades, which means you just got good risk management. So that's what I'd say. That's the most realistic way to put it, you know? Because you're going to have weeks where you absolutely kill it, right? It's going to be like anything. Where the market, you just flow with the market and you go, beautiful, right? And there's different situations for me anyway, where there's risk on and there's risk off. Different conditions where I'll put risk on or where I won't put risk on. And that'll change. That'll change things too. It depends how you manage your trade. Do you manually close out of trades if you don't like how they're looking? Or do you just let it sit? That'll impact a lot of things as well. But that's a very, very good question. A lot of people have asked me that recently. And that's the honest answer. That's the honest answer. Wow, we love it. If only I could be like you. If only I could be like you. With a 95% win rate and a 3 to 5R risk to reward. A 1 to 3, a 1 to 5. You must be like some kind of AI. I'm not even laughing, mate. Quite serious. You're up to your 3rd account now, so I think you got 2 more left. So I'll let you sit on this one for a little bit, and then you know, we'll see how you go. We'll see if you behave. Storm, be good to see a market maker sell want to play out. Yeah, so in this first macro here, it was something that was posted in the Discord. Not me, right? Someone in the Discord said they took a short, and they pretty much said, okay, well, we've got, you know, a sweep of liquidity here. I think it was at this swing high, just by a tick. Right, we swept liquidity, inversion, fair value gap, and then enter from the inversion to take price lower as a scalp. So that's what someone did post as a trade. So that's what I'd say for that one. For this one, if you're curious, same kind of thing, sweep of liquidity, inversion, or a bullish fair value gap, whatever kind of works for you. Bullish fair value gap, market structure shift, depending how you class it, and then, you know, pushing price up. So again, in these intermediate stages, just chill. Let the market do its thing. You're behaving now, mate. You're behaving. It's good. It's good to hear and good to see. Send me an email, Bart, with that with your strategy. I want to learn this 95% win rate, 1 to 5 risk to reward strategy. I think that'd be good to learn. Realistic to implement too, you know. Yeah. We're ranging quite a bit, right? I'm good, man, I'm good. I recognize your name. I've had a chat to you before. I recognize you guys, like the guys that have been here and girls that have been here for a long time. I recognize you. That's all right. We still got more. There's still more, right? There's many macros in price. The range so far, if I was just going to mark this out, it's not a huge range. 18,653. It's about a 50 handle range, which is coming more to be normal. I'm in Sydney. I'm not in Sydney, but I'm south of Sydney. I'm from Wollongong, Australia. I was in Sydney over the weekend, but yeah, it's good. Can't complain. That's right, you're from Melbourne, yeah. You never know, I might, you know, depending how many people are around, you know, we could do some kind of meetup or something of that nature. I would be interested in doing that. It just depends how many people are from different areas, you know. I think I've got a few from Melbourne, a few from Queensland, a few from Sydney, and then across the globe, yeah, crazy amounts of people. Haven't really been too much overseas, so it could be something interesting. And sometimes I like to zoom out on the chart like this and just have a look and go, okay, well, what's the kind of range you're working with? Is it a huge range? Is it a small range? And that's what might need you to be quick and scalp. Because I reckon some people would be going, okay, well, that's a market structure shift here. That's your fair value gap. And they'd be going or trying to go for a long, like here. And they'd be doing this. And they'd be doing this. All right. I'll put you onto your fourth account now. I'll put you onto your fourth account. That's his third. He's going on to his fourth, I think, soon. He or she. But keep viewing. It's cool. Keep viewing. You might learn something. And then you never know, you might switch strategies. Almost even like seek and destroy conditions here, guys. Almost even seek and destroy. No news Monday. Some people anticipate it. And I'm looking in the Discord now. Glenn, if you're here, nice trade there. Liquidity sweep, inversion, fair value gap, I'm assuming. And then obviously taking the price up. Yeah, nice. Really, really nice. That's it, yeah. I mean, you don't need too much. Be content. And if the market keeps or is back to normal in terms of the volume, in London session, yeah, like 10, 15, 20 handles is more than enough. It's more than enough. Doesn't matter if you're using minis or micros, whatever you're using, it's more than enough. So you can see, right, if you're looking at price, and I was to mark out everything here, and I'll leave it on the chart then, as like an illustration here. We're on the 1 minute time frame, right, of course. But if you took a long here, there is a 15-minute backing to your idea. Because, again, if we go on to the 15-minute time frame, you can see, and you can see how rangy we are too, right? Seek and destroy. Now, you can see this fair value gap, if I mark this out, it's a small one. It's a very small one, but it's important, right? So we can mark that out here. We can mark that maybe in green. Then you can see what price does to that on the 1 minute chart. Now we do overshoot it a little bit. That's fine. That's fine. But realistically, right, you don't want price to just aggressively, trade down below. It's such a small and fine price zone that if it's going to use it, it should use it. And in this case, notice here, it's just one candle that goes down, the next one comes back up. All right, now, if we zoom in here, we've got a volume imbalance right here, another volume imbalance right there. Usually, if I was going to mark out inversions, I would mark out everything, including these volume imbalances. I'd mark that out. And then you extend that across, that there is obviously your inversion fair value gap, which you might leave a little bit lighter. We'll leave like that. What else do I see here in terms of PD rays, just so anyone that's joined like recently can see this? You've got a bullish fair value gap right here, which you return to. Now you overshoot it again, it's messy. No news Monday, it's messy, right? It's all messy, but realistically you return to it there, and then if I mark that out in green, make it a little bit darker, you have this internal sweep right here. So if you're a turtle soup trader, that's your, your sweep. That's your turtle soup, if you're looking at that. Personally, I don't really do turtle soups. Very rarely will I do a turtle soup. It would have to have a lot of confluence for me to take a turtle soup. I don't mind a turtle soup and then waiting for a reaction after it. That could be saying, like waiting for that reaction. So having like a turtle soup and then waiting for a reaction after, I think is decent. But everyone's different. So this high, that's low resistance, right? Lower highs, all low resistance. That's why we move so quickly through it, of course. And then this obviously is a CB that rests in premium of the other range. So on days where there's no news, you can sometimes go, oh yeah, it's going to be seek and destroy, but it might not always be. You just got to watch price and then let it develop. And then soon after you'll realize whether you're in a trade or you're watching the markets like this, you'll realize it's seek and destroy, because we've just gone down, up. We're not projecting in a way that would show us that we're trending in one direction yet. So that's what I'd say here. All these highs here, that's all your low resistance, right? So all that is low resistance buy side liquidity, which is LRL. That's an important thing too. And then obviously we sweep that with some displacement. So it's one of those things, right? When you look at the markets, when you're looking at the price action, you take trades that you want to take. You don't have to trade if you don't want to trade, right? If you saw us up here, you would have taken it. If you didn't want to trade today, don't trade today. But tape read is my advice. If you're not going to trade and you're still active in the markets, tape read so you can see what price wants to do. And then obviously there's another macro coming on here, but we're so messy now. Again, we're so messy. Up, down. No follow through on either side. Just simply moving in the range. Moving within the range. So that's what I'd say. That's what I'd say with this. you could make this a typical 2022 model. You could, right? You could do that. It just depends what you're looking to do, and I suppose what you're after in price. Normally what I'll do, like on the rest of the week anyway, Tuesday to Friday with the Discord, if you guys are here, we'll have a call, for about an hour and a half, 2 hours sometimes. So usually I'll hop on around this time, usually. And then, we'll stay on for this macro, or a little bit of this price action, a little bit of this price action, and usually a little bit of the next price action. Sometimes, depending on what the day is doing, I might even stay later. It all just depends on what's happening for the day. That's the most important part. So I'm probably going to watch the markets with you guys for another, 10 minutes. So if you've got questions, ask me now. It's much easier to answer on a live call. It doesn't have to be related to, what price is doing at the moment. It could just be anything related to trading. Ask me now. And I'm happy to answer. But what you guys are doing, like if you're on my Discord, what you guys are doing is perfect. Beautiful. And again, this will be uploaded to YouTube after the fact, right? So if you want to have a look after, have a look, review that. For anyone that's just joined, I will be doing something similar every week or so. It won't be on a Monday. It might not be a live stream. It might be something a little bit different in terms of market reading. It might just be like a question and answer. It could be different, right? Different forms every week. That'll probably be on Friday. So I'm just trying to logistically figure out how that's going to work. The videos that are coming up, obviously I've got one. I'll probably post that tonight, right? That's going to be about some of the generic setups that if you look at them, they're going to occur at least once a week. At least once a week. Yeah, 100%, Molly, 100%, yeah. When there's SMT in both directions, just sit on your hands. A good example, which we talked through the Discord last week, and I remember, David, if you're here, you mentioned like the triple SMT or something like that last week. This price action here gives me similar vibes today, where you leave equal lows, you come up, you leave equal lows, you come down, you don't sweep the equal lows, you've got SMT there, you've got SMT here, bullish, bearish, all over. And it's not ideal. Eventually you move, right? But sometimes, the conditions will show both sides. In my opinion, just sit in your hands. Because here's the thing, even if price action is wonky for this whole London Open session, there'll be a trade after if you're looking for something really clean. You know what I mean? But you've got to be waiting for those setups. And then if you've taken a trade, leave it for the day, you know what I mean? But that's what I'd say. So sit in your hands. Otherwise, it's low probability conditions, in my opinion. So sometimes, no news Mondays. Usually, I won't be on the call with the Discord purely for the reason too. I think that's decent, but purely for this price action, how it's behaved. No follow through. And yes, that video will probably be posted today, I'd say, at some point, or tonight. Depends where you're from, but tonight I'll say I'll post it. And then there'll be one more, right? There'll be one more video, a part of the 10 video series. Those 10 videos, I'm telling you, if you study those videos and you apply even what's in the macros video, you're going to see changes if you're not there yet, because a lot of people get caught up with strategy hopping or, changing your strategies. You starting with one thing, you change to the next. Anything can work. The silver bullet model can work. CRT can work. Turtle soups can work. Macros can work. They also cannot work. So once you've found something you want to do and you've seen it, and you've seen it play out time and time again, your job, or even my job now, is to get better at learning when to and when not to apply your edge. When does your model work best? When doesn't it work best? When should you participate? When should you just go, oh, wait a sec, I'll hold off for a sec and I'll come back later, or I'll come back tomorrow. That is what will change the game for you, guaranteed. Any final questions from you guys before I hop off? Any final questions? Again, I've got a free Discord. If you want to join it for free, we've got a chat there. You can have a chat to people. That's all there. And keep it simple. I agree. Keep it simple. Keep it simple. This will all be uploaded after the fact too. Let me know any more questions, and I'll probably hop off. It's getting close to dinner time here, so might make that happen. And yeah, again, expect live streams similar to this, right? In the next coming weeks, on a Friday, not on a Monday, on a Friday. Now, in terms of what times they will be, it'll differ. It'll differ, right? Because I got to account for all people. So it might be sometimes in London session or after London session or before, depending on what type of stream we're doing. Question and answer, or simply something a bit different. So please keep that in mind, guys. And I appreciate everyone's support too. I really do appreciate everyone that's tuned in. Trying out some new things, and again, if I was going to give you homework, because sometimes I give the homework to the Discord, I would look over this macro phrase, get rid of all this, and send me an email. Even I've got an email. I'll join the Discord and post your homework answers there. You can chart out everything, every confluence that could lead you to take along in this macro. That's what I'll be doing. Nice to have you guys here. And if you're in my private Discord or in my Discord, we'll chat there after this. We've just swept buy side. Let's see what we do after. That's what I'll say here. But again, thanks for coming, guys. Enjoy your afternoons, mornings, nights, and we'll touch base soon. New video coming tonight, and then hopefully some new videos or new formats coming in the coming weeks. And yeah, until next time, guys, we will talk then.